Welcome to Nivesh India, powered by ET Now, an initiative backed by the National Stock Exchange. And today we come to you from the ninth city across India, Pune, the heart of Maharashtra.
We tend to save a lot but invest less. We tend to put money into unproductive areas, relatively speaking. So either there is cash lying at home and we don't care about it, or we put too much of money into low return yielding investments, and that lowers our overall return, and therefore it acts as a limitation to us achieving our goals. Now just imagine if rather than just thinking about saving, you have to think about investing. What can you achieve out of it? You can achieve creating your personal wealth. And what are the options? I believe you should seriously look at investing in equities to create a wealth. Very first reason that I have to look at equities as an asset class for you all is that equities firmly beats inflation over long term. Very few of us sometimes realize how inflation acts as an unofficial tax on our incomes. Something which is worth 100 rupees today and you can consume it, and you choose not to consume for that 100 rupees. Next year, if that becomes 110 and your investment also becomes 110, it doesn't get you anywhere as an advantage. Inflation is something that eats into your savings without you realizing it. Equities as an asset class will help you beat that inflation quite remarkably. Second, it creates some serious long-term wealth. BSE Sensex started in 1979 on a base of 100. At 27,000 today, if you try and do a CAGR calculation, it will come to about 17% CAGR without any tax implication. So the index has gone up by 226x over a period of 36 years in India. So that's the second pointer which I have for your reference. Third, very, very important. Compare it with other asset classes. We in India have been very fond of investing in gold. I mean, that's the standard. Real estate, gold are the biggest capital allocators for all the Indian households. So if you look at over 35 years also, gold has gone up by 24x, and these are all rupee calculated returns. Equity is up at 226x. While debt, if you had put in a money in 1979 in a FD, it would have gone up by 14 times. So it doesn't adjust for the inflation. We're not talking about tax implications here, and we're not talking about any other situation here. So over longer periods of time, equity again tends to outperform asset classes across the board. In general, I would always prefer that the retail investors go through the mutual fund routes and invest with the relevant asset management companies and go about it. Thank you very much.
The best bet is that the ETFs is nothing but the exchange traded fund. Even mutual funds will do. Because what happens is that these are the people who are tracking the market day in, day out. They have the expertise. So you can bank on their expertise and you can park your investment with them, and they will in turn invest into the market on behalf of you. ETFs, what we say is that, again, in the ETF, if you are on Nifty ETF, you will be investing in the top 50 listed companies. So again, the diversification is automatic. You can invest smaller amount. Today, as on date, if you want to buy one stock of each Nifty stock, you should be having at least 25 to 30,000 rupees in your pocket. Whereas if you want to buy ETF, you can buy it in less than 1,000 rupees. Easy entry and easy exit. Because even though it's a mutual fund, it is traded online, like any other stock. Unlike mutual fund where you have to wait till the end of the day to get the NAV and then decide whether to redeem or whether to purchase. In the case of ETF, even though it has a mutual fund flavor, okay, it also has a stock flavor in terms of, it is available for trading throughout the day, and you can buy it or sell it intraday. And of course, the cost is the minimum. Again, from the investor protection perspective, we always keep telling the investors that always invest through the SEBI registered broker. Don't go to the market intermediary who is not registered. The chances of you being duped are on the higher side. So always go to the authorized registered broker or registered sub-broker. The list of registered brokers and sub-brokers is available on the NSE. The market is now a safe place, and it is much more easier for you guys to invest. So I hereby extend a warm invite to you to come and invest into the stock market.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ET Now.